How much money do you have to invest into RDTE with its weekly dividends in order to make $100 every single week? That is what we're going to be finding out in this video. If you guys are interested in more weekly dividend videos, I have a full account that I've built buying just the weekly paying dividend ETFs, and it's been doing really well. So go check that out. I'll link it down below and at the end of the video. And as always, if you guys are interested in finance, in stocks, and ETFs, especially in dividend investing, don't forget to like the video and subscribe, as it helps me out a ton. And we're almost to 3,000 subscribers, which is just amazing. So that being said, we're going to start off by looking at RDTE, going over it a little bit, not too deeply in detail, as I have a ton of videos out about this one already, but we're going to cover the most recent couple of dividends, factor in that dividend yield to the actual price, and then figure out how much we need for that $100 every single week. The Round Hill Small Cap 0 DTE Covered Call Strategy ETF, ticker RDTE, really popular. Has a lot of assets under management, 32.6 million. Compared to QDTE, this is a lot smaller. They're in the 400 million range. So there is some potential for growth, in my opinion, for this one as it picks up in popularity. Now, the main thing with this fund that I think is interesting and why I think there's a lot of hype around it is the Russell 2000, which is what the calls and the 0 DTE covered call strategy is using, is higher in volatility than we've seen with the S&P 500 and the NASDAQ 100. And how that works with options writing is the higher the volatility, the higher the risk, the higher the reward, the better the premiums are typically. And so when it comes to the Russell 2000, people are assuming that this dividend is going to be a lot higher because of the higher volatility. Now, that remains to be seen. It has been pretty decent with its first couple of payments, but you want longevity to see really how these funds are going to perform. Now, the math behind that, or the theory behind it, definitely makes sense. But there is something I want to address, because I used to think that this fund wrote calls, the 0 DTE calls, on actual holdings, which I don't believe they do. I don't believe they hold the Russell 2000. I believe it's a long call position, and correct me if I'm wrong. I've had a couple people say one thing and a couple people say the other, so I want to know what everyone thinks. But the way that these work is because they're 0 DTE, you're able to recoup some price appreciation or loss during the after hours, depending on how the market is trading. So if you believe in long term that the market will go up, as we've seen over the last 30 something years, or even since the inception of the bigger indexes on the stock market, like I do believe we're going to continue to see the Russell go up, even if it has trailed behind the NASDAQ and the S&P 500, that in the after hours you will still make some money. So that's kind of the key with these things in the 0 DTE strategy, and that's why a lot of other companies are switching to these weekly dividends, because there is a lot of potential there, like Defiance, not Neos yet. I wonder if Neos is going to. I wish that they would, because I love their funds. Yieldmax has a couple. So again, I've already mentioned the other platform, or the other playlist, where I'm doing a full kind of investigation into those to see how they perform. But still, I think that RDTE has a ton of potential, and it performed really well at the beginning, at the inception of the fund. Has trailed off a little bit, but we've seen the market kind of go all over the place. Now, one thing I want to talk about, this top holdings is a RUT, a September 19, 2025 call. So this is I believe this C stands for call. It's a year out, and it's 92% of the weight of the fund, which is what I believe that they are writing their 0 DTEs against this call option. So correct me if I'm wrong. Options aren't my forte. I do trade options in my main account, but still, we can actually see the assets under management has jumped to 54 million. The fact sheet is a little bit old, so it's continuing to go up, and we can see that the expense ratio is almost 1%. So factor that in when you're thinking about your total return for these. Let's look at the distributions. We have seen, let's see, the pay date is the 18th. So we've seen 3 so far. So I want to run some numbers here. So math-wise, let's go down a little more. We have seen 3 payouts. So I'm going to calculate the actual yield that we've seen so far. So we have 0.360 plus 0.386, and then our last one was a little bit smaller at just under 25 cents, 249, and so that equals just under $1. We're going to divide this by 3, and this is our average of 33.1 cents. So now we're going to take the price of 43.87. Well, actually, we'll start with our 0.331, which is our 33.1 cents, and we're going to divide this by or we're going to multiply this by 52, which is how many weeks we have in a year, and you get $17 paid out. When we divide this by our 43.87, that's going to give us a percentage. We're going to multiply that by 100 because it's not a percentage. We multiply it by 100, make it a percentage, and we have a 39% distribution, which is pretty crazy. So this is the average of the 3 payouts so far. And again, because this fund is so new, it's difficult to try and predict if it's going to continue paying out. We have seen a little bit of a drop in price since its peak September 19. It is down just 3%, but it did have a crazy 7% run. So a pullback is kind of expected. And I'm not surprised by that. The other ones have pulled back a little bit as well, as we've seen in the other account. So what did I say? A 40% yield roughly. 39.3% yield is pretty phenomenal. So we're going to be using this calculation. We're going to avoid price appreciation and just run it based off of this payout. And hopefully the price can trend sideways, meaning it doesn't go up or down in value, and they don't have any NAV erosion like we have seen with a few of these funds. I always want to point out NAV erosion. People, there's usually some comments, and rightfully so. I'm not trying to push these on people. There is some downsides to them. You can't just yield 40% and not see some downside. If it was that easy, everybody would own only this and the stock market would go bankrupt and people would become millionaires off of it. So there are some downsides to it, which I think I talk about relatively enough, but we'll try and calculate this just based off of this return if they can keep it up. So let's jump into the calculation and see what you need to make this $100 every single week from RDTE. Jumping onto Market Beat, we can see their dividend reinvestment calculator. We have RDTE plugged in. Now we have individual stock, pays weekly. We have drip off because we're not going to be reinvesting this money. We're going to be pulling it out to use. It's $100 every single week. We want to spend that. So starting with 10 shares. Again, I have a Roth IRA account, so I don't include taxes and whatnot because my dividends are tax-free. And we have our yield that we calculated at 40%. Zero increase in dividend, zero increase in price appreciation, because this is an assumption. We can't factor in NAV erosion, but it will play a role with this fund. I imagine I get people in the comments quite often saying you're not putting in NAV erosion, and you're right, I'm not. This is kind of a best case scenario, but I can't properly factor in NAV erosion because all these funds behave very, very differently, and it all depends on the underlying index as well. Depends on how the Russell is going to perform, how many people start buying this fund, yada, yada, yada. There's so much into predicting it, so I'm just using the factors that I know right now, and I'm not saying that they're going to continue. But for 1 year, we can see that with 10 shares, you would make $171 a year, which is not a lot. So let's kick this up to 100 shares. And now we're at $1,700, which is pretty solid, nothing too crazy. But again, we want to be paid $100 every single week. So we need $5,200 in payments over the full year because we don't have drip on. Jumping up to 200, we're getting a little bit closer now. At 200 shares, your ending balance is $8,800, and your total dividend payments for 1 year are $3,435. But we're still not quite there yet. Let's jump up to 300 shares. Ending balance of $13,137, and we're right under. We are at $5,153 a year. Let's go to 305. And now we're just over. So at 305 shares, you would be able to collect $5,240 every single year, which averages down to about $100 a week from RDTE. Again, this is all an assumption on how this fund is going to perform based off of what we've seen so far, but because of its history, that doesn't mean we can predict the future. But I am very excited for this fund. I think there is a ton of potential in these weekly paying dividend ETFs, and because of their popularity, a bunch of other companies are following suit. My assumption, my guess, JP Morgan will start coming out with a weekly fund. I guarantee that some of the bigger players have seen the popularity of these funds and will soon want to play a role in it as well, because there is a ton of money for them to be made. The management fees are higher. There's a lot of expense that goes into these, but the popularity right now is just insane. So I hope you guys enjoyed this video. Don't forget to like and subscribe. You guys have been amazing with giving me support for all these videos, and I really, really appreciate it. I never thought the channel would grow to this size, and I'm excited for its future as well. So thanks again. As always, I appreciate you guys for being here, and I'll see you in the next video.